Hey everyone, welcome back to Corporate Decoder, the place where we crack open corporate filings like a cold one after a long day. Today, we're diving into International Money Express, or Intermex, ticker symbol IMXI's latest 10K report. Now, don't let the name fool you, this isn't about express shipping, unless you're talking about sending money across borders lightning fast. I'm already predicting a few interesting twists and turns. It should be interesting. I will certainly have some opinions. Intermex is a big player in the money transfer game, especially for folks in the US sending cash to Latin America and the Caribbean. We're talking billions of dollars zipping across borders each year. But this report hints at a bit of internal drama, and you know we're here for that. What do you mean you are suspending an exploration of strategic alternatives like selling the company? First, the basics. This is their annual report, so it covers the whole year ending December of 2024. It's basically a yearly checkup to see how healthy the company is. They move money from the US and Canada to places like Mexico, Guatemala, and other countries in Latin America, Africa, and Asia. They do this through a massive network, plus their own stores online and even through mobile apps. Before we get too deep, there's always the legal disclaimer, the forward-looking statements. Basically, it's Intermex saying, hey, we're making our best guesses about the future, but things could change. And boy, do they list a lot of things that could change. Everything from new laws and regulations to economic issues to even something like the war in Ukraine impacting transfers from the US. Here's the big one. Intermex was actually considering selling the company, but they've decided to put those plans on hold, and I'm already curious. They admit this could affect their stock price negatively. Why? Because investors get excited about potential buyouts, and when that possibility disappears, so can some of the enthusiasm. What else are they worried about? Keeping their agents happy. These are the folks at local stores who actually handle the money transfers. If those agents jump ship to a competitor, Intermex could take a hit. They also worry about competition in general, and if they don't keep up with the latest tech, customers might go elsewhere. A big one is economic conditions. If there is a broad recession, fewer immigrants in the US will have jobs, so less money gets sent home. Because Intermex does business in a lot of different countries, they're exposed to all sorts of international risks that a purely US company wouldn't face. Think political instability, currency fluctuations, and even restrictions on sending money out of certain countries. Of course, these days every company has to worry about hackers. A successful cyber attack could damage their reputation, expose customer data, and cost them a ton of money. The company is doing everything in its power, but so are the attackers. The world of money transfers is heavily regulated, and Intermex has to comply with a ton of rules to avoid getting fined or shut down. The Consumer Financial Protection Bureau is watching them closely. Speaking of security, they have a whole section dedicated to cybersecurity. They follow industry best practices, have a dedicated security team, and even hire outside experts to test their defenses. The company thinks all of their current countermeasures are great, but also has the need to let their board know every quarter about any problems. Alright, let's talk about the people in charge. The CEO and president is Robert Lissy, who's been with the company for a long time. They also brought in Andres Bend as CFO a few years ago, and Christopher Hunt as the Chief Operating Officer, as well as Robert Pargek as Chief Legal Officer. These are the guys steering the ship, so their experience is pretty important. Alright, how does Intermex make money? Their main business is still sending money from the US, Canada, Spain, Italy, the United Kingdom, and Germany to Latin America, Africa, and Asia. They do this through a network of agents, as well as through their own stores and online platforms. Their market is immigrants sending money to families back home. Okay, let's dive into the numbers. They are a bit all over the place, but for the year ended December 31, 2024, wire transfer fees were $554.8 million, which actually is a small decrease. But that comes with a positive spin. Other income increased substantially. Digital channels also helped. What's that all mean? Their traditional business took a tiny hit, but are making more money doing it a different way, which is something new and innovative. Service charges were $428.9 million, and those also went down, which can be easily explained because it tracks with the decrease of transaction volume that we just talked about. Salaries and benefits took a $2 million dip. This is primarily due to reducing the workforce, and a reduction in bonus expense due to not hitting adjusted EBITDA targets. Not good news for the employees who are not there anymore, but great for the financial health. Depreciation and amortization increased a bit due to investments in new software and computer equipment for the new headquarters. But this is offset by decrease related to trade names and other things they own, so overall pretty positive for the business because it means that it is reinvesting in the company for long-term financial well-being. Diving deeper into the numbers, the company restructured some of its foreign operations during 2024. This move cost them about $3.1 million to do, which may seem like a lot and includes paying off the former employees as well as disposing of some obsolete tech, but they expect to save millions a year. Scroll which is the point of these restructurings anyway. Let's talk about debt. The company has a credit agreement with a bunch of banks and it allows them to borrow money. It's a multi-million-dollar revolving credit facility used to support the business. They also have to meet certain financial goals called covenants. The covenants limit their ability to do things like take on more debt or buy other companies. As of the end of last year, they were meeting all of these requirements, so financially they seem to be okay. The company also repurchased a ton of their own stock. This means they are trying to increase the value by giving less people a bigger slice of the pie. If the company is doing well, this can boost the stock price, which makes investors happy. Overall, Intermex is in a heavily regulated industry. The company mentions that some governmental agencies are also asking for data sharing requests to prevent terrorist financing or human traffic. This is probably something that costs money and that they can't afford to ignore. They are exposed to risk in different currencies. To counter this, they enter foreign exchange transactions as well as keep a diversity of account to keep their wealth protected. All those things are good. There are also some data protection measures. These are measures to prevent cybercrime by having employees and management stay on top of the security of their tech that have an audit committee review and oversee their systems and processes. Alright, let's put all this information together. Intermex is navigating a pretty complex world, and the fact that they are pausing the sale is interesting. Are they betting on themselves? Are they not getting the valuation that they think they deserve? Do they know something the potential buyers don't? We don't know, but they certainly seem like they are planning to invest in the company moving forward. It seems that Intermex has a primary focus on profitable corridors, so that they can keep an eye on the money coming in and going out and make the most of their main markets. I'm just speculating, but that's probably why management took down the sale to a private transaction. There are a lot of challenges and changes, and the company is doing everything in its power to stay ahead of them. Whether it's cybercrime or government regulation, economic factors such as inflation, international political factors, or even public health conditions, and that is their largest weakness. So is Intermex a buy? I can't tell you what to do with your money. The numbers seem to be strong, and as of late in the year, they have an incredibly robust approach to their debt. So overall, this seems like a strong stock that has more than what meets the eye. Thanks for watching. If you found this breakdown helpful, hit that like button, drop a comment, and subscribe so you don't miss our next corporate deep dive.